40 points higher on the Nifty. Sensex up almost 133 points.
Things have been very listless, range-bound on the index level. All the action has been on individual stocks. Indices trade flat amid a choppy session after a strong open.
There's not very much to really report on the index, at least. Advances to declines ratio from the word go this morning has been almost 1:1. The Nifty ends at the highest point in the day. Banks is what led it, and the Nifty Bank basically makes that point.
Hello and welcome to CNBC TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for the day. Indian indices end a range-bound session in the green thanks to a late surge. Nifty Bank ends at a record high. Mid-caps underperform with the index ending the day flat. ONGC gains 2% on higher than anticipated realizations, beating street expectations on revenue, EBITDA, profit, while a tax after tax, while a 50% drop in realizations puts NMDC 4% lower. Tire companies Apollo Tyres and Balkrishna Industries clocked gains on strong performances for the second quarter of the fiscal. Apollo Tyres beats expectations on sales and margins, while Balkrishna Industries ticks up as volume surprise and margin expectations improve. Ahead of insurance sector's highly awaited Bima Sugam launch, industry feedback suggests that the platform is likely to charge commissions at a much lower rate than current levels. Sources say PB Fintech, the owner of Policy Bazaar, has requested insurance regulator to allow them to reduce commission rates. Rail PSUs RailTel, RVNL and IRCON scale 52-week highs on strong Q2 results and order inflows. However, IRCTC slides 2% lower after a soft quarter that saw revenue, EBITDA and margin all fall sequentially despite a 99% rise in revenue year-on-year. All right, those were all of the top stories that we're tracking for you this evening. Let's tell you what we have lined up for you. It's a packed show this evening. In Market Opinion, we have BSE member Ramesh Damani. And in Big Corporate Voices, we have M.R. Kumar, the chairperson of LIC. All right, straight to the market action of the day. A late surge helped the Nifty and the Sensex end another range-bound session close to 0.5% in the green. Banks led from the front, with the Nifty Bank ending the day at a record close. The index ended above 42,200 for the first time ever. Mid-caps underperformed the benchmark indices, with the index ending the day flat. Prashant Nair joins in with a wrap of all what took place today. Prashant.
It was a late surge which showed up in the Nifty, and the close was finally above 18,400. A flat day for most parts, but a very different looking screen by 3:30. The gains came through in banks and ICICI Bank in particular. Actually, about 35% of the Nifty gains were on account of just ICICI, and its contribution on the bank Nifty was even larger because of the nature of the index. ICICI Bank and SBI, the two pillars, but ICICI, of course, doing bulk of the heavy lifting. Outside of banks, ONGC, Power Grid and Bharti were some of the other stocks which did quite well. Overall, I mean, the mid-cap index, small-cap index, not quite keeping up with the Nifty. So market breadth was 1:1, advances to declines ratio, and lots of stocks lost on big volumes. So names like Coal India, Nykaa was down big time today. Naukri, that is Info Edge, lost quite a bit. Campus Footwear recovered from the lows, but that's been a absolute, I mean, it's got hammered after the results. DCX India, recent listing. Fluorochem is corrected. Aster DM, VRL Logistics, Global Spirits, some of the names. What did well? Rail infrastructure stocks continued their run. So RVNL, RailTel, defense names like Mazgaon was up about 5%. Gujarat Gas was higher. NCC, Garden Reach and HPL Power, to name a few. So very, very stock-specific market. It showed up on the index because of ICICI mainly, as I said. But I think what lies ahead is, at least from the US session, is more Fed speak. We will hear from policymakers on what they want to do in terms of, the rate policy in the US. So there are two speakers lined up, lots through the course of the week. And after the CPI numbers, we get the producer inflation numbers later today out of the US as well, which gives us a little more idea on how things are developing.
Okay, all right, Prashant. Thanks very much for that. Well, let's get in some expert opinion then. Gautam Trivedi, co-founder and managing partner in Nepean Capital, said that the Indian market has had a good year so far. He added that the key factor holding up the Indian market has been the domestic investors.
With respect to India, we're the second best performing market in Asia after Indonesia, which is fantastic. So we're year to date down only about 5%. We've significantly outperformed the MSCI emerging markets, which is down 26%. We've outperformed China, which is down as much as 32% this year. And also the S&P, which is down 16%. So I think we've had a very good year so far. I think the one factor that you must keep in mind is that the Indian equity markets have been supported for the past about 18 months or so by domestic demand and domestic retail and institutional investors, not so much by foreigners. The only thing that's been holding up the market in India, in spite of the relentless selling that we've seen this year by foreigners, which is about roughly 20 billion odd of year-to-date selling, has been the domestic investors.
Okay, well, let's get in some more opinion then. Vikash Jain, India strategist at CLSA, said that their current strategy is to go overweight on the big laggards. Listen in to what he said.
We've been underweight IT for a long time. That has turned into a very small overweight, neutral to overweight IT now. In our opinion, the big trade to play would be from here on, particularly in the last few weeks of the year, we see a tendency for laggards to play catch up. And there are a lot of laggards that we have in our portfolio at this point of time. From that perspective, it's a rather anti-consensus portfolio that we run. And, IT could be one of them in general. Banks is a rather consensus overweight. That's not really something which is very different anymore. We've been overweight on banks for a while. If you look at the setup, we expect yields to kind of continue rising in that kind of a setup. These private banks could have NIM expansions. So that's something which we continue to play.
Okay, so that's some opinion, but let's get to the second story that we're tracking this evening. ONGC gains 2% on higher than anticipated realizations. The oil PSU also beat street estimates on revenue, EBITDA and profit after tax. Sonal Bhutra is standing by with the wrap on the company's performance.
Thanks a lot for that. Well, yes, strong set of numbers coming in from ONGC, and it was not just good numbers, it was a big beat versus the parameters. Of course, quarter-on-quarter numbers were lower because of lower crude prices. But look at the numbers versus the poll. Revenues at 38,320 crore rupees, which compares with a poll of 35,560 crore rupees. EBITDA at 18,811 crore rupees, which is 1,000 crore higher than the poll, which was coming in at around 17,000 crore rupees. Margins at 49%. Yes, they have declined on a quarter-on-quarter basis, but profits also 3,000 crore rupees higher than what the poll was suggesting at 12,825 crore rupees. Surprisingly, net realizations, that is crude oil realizations, they have come in higher than what the street was working with. It is a 37% YOY growth versus an expectation of just 7% YOY growth, and the number has come in at $94.96 per barrel. So good going for ONGC. Now the next thing to watch out for will be how the windfall taxes are decided every fortnight. That is the way, and also crude oil prices. Overnight they were down, but we need to watch out for the trajectory. But net oil realization strong at $95 per barrel, and that's why the stock is buzzing in trade.
Okay, all right. Thanks very much for that. Well, let's move on then. On the other hand, NMDC lost 4% in trade after a second quarter where realizations dropped significantly. Nigel D'Souza is standing by with more.
Well, that's right. NMDC's numbers are actually disappointing on the top line, the margin performance, as well as the profitability. Let's run you through a couple of factors that played out. First, on the top line, we had the provisional sales numbers with us. We were expecting close to around 8.7 million tons odd. The number came in at around 8.4 million tons. So there was a miss on the volumes front. Not just that, even realizations, they contracted more than expected. They were down by close to around 48% on a year-on-year basis, which is far more than what the street was expecting. So it was a top miss, which later, percolated to the other parts of business. That's the operating profit as well as the PAT. Now, another factor that hit the operating profit, besides lower volumes as well as realizations, was the employee costs that spike up. That's what hurt them. On the profit front, though, there was some kind of support that came in from other income. Remember, they've demerged the steel part of their business, so maybe the one-time income did come in on that front. Citi, they have gone ahead. They downgraded the stock to sell with a target price of around 100 rupees. They struggle to find upside triggers until the government withdraws that export tax duty that's currently levied on iron ore. So all in all, a weak set of numbers explains why the stock was lower in trade.
Okay, all right, Nigel. Thanks very much for that. So that's on NMDC. But on to the third story this evening. Tyre companies Apollo Tyre and Balkrishna Industries clocked gains on strong performances for the second quarter of the fiscal. Apollo Tyres closed 5% higher after beating expectations on sales and margins. Sonia is here with the details on the company's earnings.
Well, thanks for that. Apollo Tyres hit a fresh 52-week high today after reporting a very good set of numbers. In fact, across the board, it was a beat by the company. The margins went up 40 basis points on a quarter-on-quarter basis and have, been higher than what the street was estimating. More importantly, the European business margins have improved sequentially, and the EBITDA growth in the India standalone business came at a time when peers like MRF and CEAT reported a fall in their EBITDA. So compared to peers, Apollo Tyres has been standing tall. The revenue growth was also quite healthy, a 17.5% growth. The only problem for Apollo Tyres, the niggling worry, is the rising debt situation. So the net debt in Q2 has risen to 5,470 crores from 5,100 crores in the previous quarter.
Okay, all right, Sonia, thanks very much for that. That's on Apollo Tyres. Meanwhile, Balkrishna Industries also gained 5% as volume surprised and margins were above expectations. Sonia is still with us to tell us about what went right for that particular company.
Well, I'm also watching out for Balkrishna Industries. The stock was very volatile today after the company decided to suspend its annual guidance for volumes for the full year, saying that the situation is very challenging in Europe. Balkrishna Industries told their investors that the challenging situation in Europe may put further pressure on their business in the second half of the year. Not just that, there is a downward revision in their capex plans as well. The reduced capex now stands at 335,000 MT per annum. The margins were also under pressure. The EBITDA fell 21% for the company this time, and in Q2 the margins fell to 16% versus 25.9%. However, the stock did recover in late trade.
Okay, all right, Sonia, thanks very much for that. That's on a lot of the tyre companies which were in focus. Time for a break now. But before we go, we leave you with some comments from BSE member and market veteran Ramesh Damani on his investment strategy and top sectoral bets.
If I want to ask you about Nifty from here, 20,000 first or 16,000 first, what would be your answer?
The higher one.
The higher one? Oh,
yes.
wow.
Okay, that's bullish, Ramesh Damani.
Absolutely.
Technology stocks or PSU stocks, what do you prefer?
Actually, like both the groups, but right now I'm more invested in PSU stocks.
What about gold or real estate, the asset class that you prefer, apart from equities, of course?
Probably real estate. Gold is, Sonia, inflation last year was a 40 years high, 8%. Gold was down 10%. Yeah. I mean, that tells you something that people have moved on from gold.
Welcome back. You're still with us on Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking for you. Well, on to the fourth headline this evening. Let's get you the latest on the insurance front. The regulator IRDA had proposed the formation of Bima Sugam, that will be a one-stop platform for all insurance needs. Now, industry feedback suggests that this platform is likely to charge commissions at a much lower rate than current levels. Yash is here to give us a lowdown on what Policy Bazaar is seeking.
Well, this indeed is a very crucial ask which PB Fintech has made with the insurance regulator. The ask from PB Fintech's side is that its insurance aggregator platform, that is Policy Bazaar, should be allowed to reduce commissions of various insurance products on the platform and also to pass on those benefits to the policy holders. The timing of this particular ask is very crucial. Remember that the insurance regulator is in the process of putting up an aggregator-like platform, Bima Sugam, which will be responsible for sales, servicing and claims of insurance policies. Not just that, industry feedback suggests that the commissions on Bima Sugam could be 1/4 of the existing commissions which are being paid to the current aggregators or even agents, and hence to stay relevant in the insurance aggregation market, Policy Bazaar has also asked that they should be allowed to reduce commissions to match up to the commissions that Bima Sugam charges, so that they stay relevant in the market, and also they should be allowed to pass on these benefits of lower commissions on the end policy holder. Why aren't these allowed as of now? That's because Policy Bazaar can reduce commissions, but it cannot pass on those benefits to the end policyholder simply because that's considered as a rebate, and that is against the insurance regulations, and hence a change has been asked there. This will certainly impact the revenue, the operational revenue which Policy Bazaar makes, because the entire operational revenue is essentially its commission income, and if the commissions come down, this certainly will have an impact on the operational revenue side for the company. We also spoke to Yashish Dahiya, the co-founder and CEO of Policy Bazaar. Hear out what he had to say on this one.
You're saying, okay, if it happens, if commissions become zero, will you also do commission zero? Will that mean thousands of crores of losses for you? Yeah, of course. 100%. Right. Why else do we have that 6,000 crores of capital lying around? But the point is, I know you want that, and I know you want that fun, but the point is the world is not going there.
Okay, well, meanwhile, earlier in the day, M.R. Kumar, the chairperson of LIC, spoke to CNBC-TV18 about Bima Sugam's impact on agents and LIC's embedded value. Here's a slice of that conversation.
I know the embedded value has been very slow in moving up, but then please remember that when we did this for the first time, we had modeled only 90% of the products, and as of now, we have modeled all the products, and things are settling down. I think it is achieving some kind of consistency now, and going forward, I think it will grow. I can't give a future value to it because we'll have to wait and see what happens, but we're very confident that we'll be able to change things there.
There is this possibility of the Bima Sugam, coming out as well. Regulators are talking about it. It could be a UPI moment for the insurance industry, this one-stop shop policy. Can you tell us how will it change the dynamics of the industry, and for your own business, what could the impact be?
Actually, Bima Sugam initiative is a very good one by the regulator. It proposes to facilitate the digital delivery of services in a very consistent and time-bound manner. So what we have done already is that we have some integration with the banks, new age fintechs, and online payment application. Bima Sugam, I think, will further enhance our digital services delivery.
And Bima Sugam, from the industry feedback which we have, the commission could be 1/4 of what agents charge. That is detrimental to the largest, business acquirer for your company. What is the feedback that you're receiving from agents, and could that section of business have a negative impact as far as Bima Sugam is concerned?
In terms of commission rate and other things, yes, it will be reduced, no doubt. But then I'm sure the agents will ramp up their businesses in their own way. We still have a lot of work to do in terms of penetration. There's a lot of work to be done in the country. I don't see any challenge for the agents as of now.
Okay. Tell us a little bit about the plans with IDBI Bank and the stake there.
Government, I think, has already come out with the expression of interest for this. And in terms of that, I think it's clearly defined what kind of a stake we would be wanting to divest. We are, as I've said before, very keen on continuing a partnership with IDBI Bank, who is the #1 bancassurance partner for us as of now. They have done very good work in the bancassurance space. We would like to ensure that we have just enough stake to carry on that momentum. But again, it will depend on the regulatory space, both in the banking and the insurance regulatory space, how much we will be able to hold in the future.
Something which all investors of the company do want to know from you: why did you not choose to distribute those profits to your investors in the form of dividend, in the form of bonus? And if not in this quarter, for the financial year, is there a plan which is being considered on a dividend or a bonus?
As of now, there are no plans. We will have to discuss it, in depth, deeply, internally, and with the board.
Okay, so that's the word coming in from LIC, but let's move to the fifth headline this evening. Rail PSUs, RailTel, RVNL and IRCON scaled 52-week highs on strong Q2 results and order inflows. In fact, market veteran Ramesh Damani sees great opportunity in the railway and the defence sectors. Listen in.
The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment. And here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books, they have excellent technological skills, and we are buying them literally, as I said, rupi ki cheez chavanni mein, not even athandi mein. So, you know, we're very confident about the play out in these sectors. A lot of what's happening in India excites me, and the reason for that is by just a freak of coincidence. We're at the right place at the right time.
Okay, well, sticking with railway PSUs, IRCTC slid 2% today after a soft quarter that saw revenue, EBITDA and margins all fall sequentially. This comes despite a 99% rise in revenue year on year. Mangla Malu is here with the details on IRCTC.
It has been a soft quarter indeed for IRCTC, and that's why the stock is lower in today's trading session. Depends on how you look at it. You know, one would say that quarter on quarter it is a slow train, 5% decline in their revenues as well as the EBITDA, as a result of which an 8% decline in their profitability as well. But if you take a look at it year on year, there has been a 99% jump in their revenues, but that has meant that, you know, despite that, the EBITDA has grown just around 44% and the net profit too has grown at similar levels. Why is that? Because the growth has been led by businesses which were only partially open the same time last year. Case in point, something like the catering business, which grew about almost 370% in terms of revenue this year. But with that, we also saw catering expenses grow from almost 228 odd crores to 280 odd crores. That's a low margin business for the company. The business that drives the margins for them, which is the internet business, the internet ticketing business, that was flat quarter on quarter, and year on year as well, the growth was just about 13%. Nothing really to write home about. The other business that did well for them was Rail Neer, which was the water business. Again, on account of a favorable base, grew by about 75%. But this too is a 7.5 to about 8% sort of margin business. So growth being led by margin draggers, whereas the margin supporter was the one which saw very limited growth, which is why the stock is lower in trade today.
Okay, all right, Manglam. Thanks very much for that. On that note, it's also a wrap on this edition of Markets Today. Thanks very much for watching.